Welcome, and thanks for joining us for another episode of the 10-Minute Dental Marketing Podcast, a program dedicated to helping you grow your dental practice. In each episode, we'll discuss how you can improve your online presence and use the power of the internet to grow your practice.
This is the audio version of the blog post, How the One Big Beautiful Bill Affects Dental Practices in 2025, What Dentists Need to Know About New Tax Laws. This audio was AI generated. We apologize for any AI errors. Send us feedback at support@titanwebagency.com. The One Big Beautiful Bill, OBBB, became law on July 4, 2025. This 900-page legislation changes tax policy, Medicaid, and education funding across America. Dental practice owners face specific impacts that require immediate attention. The law creates significant tax savings opportunities for most dental practices. However, it also introduces risks for practices that treat Medicaid patients. This guide explains exactly how OBBB affects your practice finances and patient base. Major tax benefits of the One Big Beautiful Bill for dental practices. 1. Permanent 20% business income deduction. The OBBB makes the 20% qualified business income QBI deduction permanent for pass-through entities. This includes S-corps, partnerships, and sole proprietorships. Most dental practices operate under these structures. The deduction reduces your effective federal tax rate by up to 20%. For high-earning dentists, this drops the top marginal rate from 37% to 29.6% on qualified business income. Income limits. Full deduction applies to taxable income below $191,950 for single filers or $383,900 for joint filers, 2025 amounts. Above these thresholds, dental practices face phase-outs as specified service trades or businesses, but OBBB expands the range where partial benefits still apply. Real example, Dr. Smith operates an S-corp dental practice, generating $300,000 in qualified business income. With the permanent QBI deduction, she saves $60,000, 24% tax rate, equals $14,400 annually in federal taxes. 2. Expanded state and local tax deductions. The SALT deduction cap increases from $10,000 to $40,000 through 2029. This particularly benefits dentists in high-tax states. Income limits. Full $40,000 deduction applies for income up to $500,000. Above this, the deduction phases down by 30% of excess income. Real example, Dr. Johnson practices in New Jersey and pays $35,000 in state and local taxes. Previously, he could only deduct $10,000. Now he deducts the full $35,000, saving an additional $25,000, so his 32% tax rate equals $8,000 annually. 3. Pass-through entity tax workarounds. Preserved state PTET regimes remain intact. These allow pass-through entities to pay state taxes at the entity level, bypassing individual SALT limits entirely. Real example, Dr. Hack Martinez's California practice pays 9.3% stakes through PTET on $400,000 of income. The $37,200 state tax payment is fully deductible federally, saving $37,200, 32%, $11,904 in federal taxes, while receiving state tax credits. Dramatically increased equipment expensing. Section 179 limits double. The immediate expensing limit increases from $1.22 million to $2.5 million annually. The phase-out threshold rises from $3.05 million to $4 million in total equipment purchases. What qualifies? Dental chairs, sterilizers, x-ray machines, imaging equipment, computers, software, office furniture, and qualified office improvements. Real example, Chen invests $400,000 in new digital imaging equipment and qualified office renovations. She expenses the entire amount in year 1, reducing taxable income by $400,000. At a 32% tax rate, this saves $128,000 in current year taxes. 5. Research and development expensing returns. The OBBB restores immediate expensing for qualified domestic R&D expenses, eliminating the previous 5-year amortization requirement. What qualifies for dental practices? Developing new treatment protocols, custom dental devices, clinical software development, or testing new sterilization methods. Must eliminate technical uncertainty through a process of experimentation. Real example, Dr. Patel spends $50,000 developing a custom software system for patient treatment planning. Under OBBB, he expenses the full amount immediately, rather than amortizing over 5 years, providing $50,000 to 24% equals $12,000 in immediate tax savings. 6. Student loan relief affects recruitment new income-driven repayment plan. Starting July 1, 2026, a new IDR plan scales payments from 110% of adjusted gross income, with a minimum monthly fee of $10. Loans receive forgiveness after 30 years of payments. Tax-free employer assistance. Beginning January 1, 2026, employer student loan assistance becomes permanently tax-free up to $5,250 annually. Practice impact. These changes make it easier to recruit and retain young dentists carrying significant debt loads. Practices can offer competitive benefits packages, including student loan assistance. Medicaid changes threaten revenue. If you take Medicaid, you've likely heard about the changes that are coming as well. Let's quickly go over them. Adult dental benefits become fully optional. Starting in 2026, states will gain complete discretion to eliminate or reduce adult dental coverage without federal penalties. Pediatric dental benefits remain federally mandated. Risk assessment. Practices serving significant adult Medicaid populations face potential revenue loss. States facing budget pressures may target optional adult dental benefits for cuts. Real example, Dr. Rodriguez's practice serves 40% adult Medicaid patients in a state considering benefit cuts. If the state eliminates 75% of adult dental coverage, her practice could lose 30% of patient volume, requiring significant operational adjustments. Implementation timeline. Late 2025, states submit benefit redesign plans. Early 2026, cuts and flexibility provisions take effect. 2026-2028, phased implementation of benefit reductions. Overall OBBB implementation timeline, 2025. Most tax provisions take effect immediately for tax years beginning after December 31, 2024. Late 2025, states submit Medicaid benefit redesign plans. Early 2026, Medicaid cuts and flexibility provisions take effect. Student loan changes begin July 1, 2026 to 2028. Full Medicaid implementation phases in gradually. 2029 SALT deduction cap reverts to $10,000 unless extended. Strategic winners and losers of the One Big Beautiful Bill, practices that benefit most. High-income practices in states with significant state taxes, practice making substantial equipment investments, pass-through entities utilizing PEAT strategies, practices with minimal adult Medicaid dependence, practices facing challenges, practices where adult Medicaid patients exceed 30% of volume, practices in states with severe budget constraints, practices are unable to utilize equipment expensing opportunities. Essential action steps for 2025 to maximize the One Big Beautiful Bill changes. Immediate tax planning. Meet with your CPA before year-end to maximize 2025 benefits. Review QBI deduction eligibility and adjust estimated payments. Plan major equipment purchases to utilize expanded Section 179 limits. Evaluate practice structure. Confirm your entity structure optimizes tax benefits. Consider PTED elections in applicable states. Review wage and capital limitations for QBI calculations. Calculate state tax savings. Run projections using the $40,000 SALT cap. Determine actual savings for your income level and state tax situation. Assess Medicaid exposure. If adult Medicaid patients represent more than 20% of your practice, develop contingency plans. Create financial models for various benefit reduction scenarios. Plan equipment investments. Identify equipment needs for 2025 to 2029. Time purchases to maximize tax benefits under the expanded Section 179 limits or 100% bonus depreciation. Build multi-year strategy map financial plans through 2029 when SALT benefits expire. Balance current tax savings with long-term practice growth investments. Maximize benefits while managing risks. The One Big Beautiful Bill creates substantial tax savings opportunities for well-positioned dental practices. The combination of permanent QBI deductions, expanded SALT caps, and increased equipment expensing can generate significant cash flow improvements. However, practices dependent on adult Medicaid patients face genuine uncertainty. Success requires proactive planning that captures tax benefits while preparing for potential reimbursement challenges. Expert guidance ensures optimal results. CMP specializes in helping dental practices optimize complex tax legislation impacts. We understand how laws like OBBB affect practice operations, cash flow, and growth strategies. Our team helps you maximize available tax savings, structure equipment purchases optimally, and develop contingency plans for regulatory changes. Contact CMP today to schedule your OBBB consultation and create your comprehensive financial strategy.
Thank you for joining us for another episode of the 10-Minute Dental Marketing Podcast. Implementing just one of the tips you heard today will help your practice move one step closer towards dominating your local market. If you got more questions, or you're looking for recaps, show notes, and even more resources to help you grow your practice, check us out at TitanWebAgency.com.